meaning that if Bitcoin can reclaim 44 and stay above it for a couple days, you can head back to your highs here and retest your 52-week highs on Bitcoin. However, it hasn't done that. So as of now, this is still a net bearish chart as long as price action stays below here. All right, so again, notice how that's the high. If you look at the high of the weekend, it was basically $43,000, just shy of that. Ethereum has been lackluster. So even with the bounce in Bitcoin that we saw, Ethereum is still struggling, which is very intriguing.
Gareth Soloway, a seasoned trader boasting more than 2 decades of expertise, delves into a thorough chart analysis that outlines crypto levels and anticipates market movements, all while keeping a keen eye on the imminent Federal Reserve decision. Bitcoin has witnessed a positive turn of events as it reclaimed the $43,000 mark on Tuesday, thanks to a significant reduction in selling pressure from asset manager Grayscale. The reversal in Bitcoin ETFs during day 12 of trading has seen more inflows than outflows. According to Soloway, the importance of the $43,000 to $44,000 range for Bitcoin is underscored by its potential to reclaim and maintain a position above $44,000 for a few days. If this scenario unfolds, it can drive Bitcoin towards revisiting its earlier highs. Renowned author and financial educator Robert Kiyosaki recently expressed his strong preference for Bitcoin as a tool for protecting wealth. Amidst a rally that has seen Bitcoin spike over 10%, crossing the $43,000 threshold, and Ethereum approaches the $2,500 mark, the crypto market is riding a wave of bullish momentum. Solana has enjoyed an uptick in price, surpassing the $100 mark for the first time in over 10 days. Soloway presents a comprehensive chart analysis outlining future movements on both the Ethereum and Solana charts. Let's delve into the video to explore these insights further. Before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
Here's your Bitcoin chart, classic retrace. We saw a classic retrace here. So let's just take a look. What happened? I annotated the chart out so everyone should be able to see it. But we had a trend line right here going through. We broke out. So this was resistance, right? Resistance right here. We continued to consolidate. We broke out. We retested, support. And then we broke down. And look, now we've retested on the opposite side as resistance. So 43 to 44,000 to me is really important for Bitcoin, meaning that if Bitcoin can reclaim 44 and stay above it for a couple days, you can head back to your highs here and retest your 52-week highs on Bitcoin. However, it hasn't done that. So as of now, this is still a net bearish chart as long as price action stays below here. All right, so again, notice how that's the high. If you look at the high of the weekend, it was basically $43,000, just shy of that. That's your resistance trend line, and look how it was rejected. Now again, as we trade the next couple days, let's watch to see, does it get above or does it start to roll over here? If it rolls over, this will just be a short-term little support, and I actually think we're headed lower, possibly down to 35. 35 would be our next support. After 35 would be 30 to 32. 30 to 32 is my zone. All right, that's the big level for me that I'm really zoning in on, that I will probably be picking some up myself. Quickly going to Ethereum. Ethereum has been lackluster. So even with the bounce in Bitcoin that we saw, Ethereum is still struggling, which is very intriguing. We're still holding this support line, though. Again, you have a classic support right through here, right through here, right through here. So you can see right there, that continues to hold. If that breaks, you're likely headed down to probably the low 1900 range on Ethereum. If it holds here, it can trade back up here, but you're going to run into resistance at a couple different points along the way. It's going to have to fight through those levels. All right, let's keep going here, guys. Take a look at this. This is one of the charts that I actually choreographed perfectly for you guys last week. I said, guys, look at the breakdown on Solana. It's probably going to retrace to the scene of the crime. Remember, we just saw that on Bitcoin, how it retraced to its scene of the crime. Here you can very clearly see trend line kept on hitting support all the way through, breakdown and retrace to the scene of the crime, which is now resistance. Okay, so again, again, that's important to recognize. Now, again, the big question is, does it get rejected or can it break above? Breaks above, it can trade back to that 126 level. Doesn't, then this is just short-term support at 78 or so, 77, and it could be headed lower.
The US dollar is back to flat from its opening on Monday and enters back to the tight area where the US dollar index has been moving in for 2 weeks. The 10-year Treasury yield was lower Tuesday as the first Federal Reserve policy meeting of 2024 kicked off and traders parsed through fresh economic data. The yield on the 10-year Treasury was down by 3 basis points at 4.060%. At the Fed's last meeting in December, policymakers indicated that they were expecting 3 rate cuts in 2024, but minutes from the meeting showed that the path ahead for monetary policy remained highly uncertain. Following Soloway's approach, there's a question mark hovering over the trajectory of the dollar as we approach the Federal Reserve decision. Now, let's shift our focus to a video.
The dollar continues to kind of grind up here. The last week on the dollar, look at this. This is interesting. So notice this pattern repetition. We have up, sideways, and up and sideways. All right, so again, this is something that I recognize. Pattern recognition is very important in investing. An up move with a sideways move about a right angle or 45 to 90 degrees, that's known as a bull flag or an in spirit of bull flag. So I don't, again, I keep my personal views out of things as much as possible. The chart is what's supposed to guide us. And right here, this is telling me the dollar probability-wise is heading up to this target that I gave you a while back at around 104.30 or so on the Dixie. So that still looks likely. The question I have is, does this go up there going into the Fed, and then do we see a pullback with the Fed decision or lack thereof, or does it go sideways and then pop on the Fed? And I'm watching that, but I still think this is resistance. If we go up here into the Fed, I wouldn't be surprised if we pull back on the Fed decision or lack thereof. All right, couple other things. The 10-year yield. 10-year yield is creeping down just a little bit, but again, what's the pattern here? Is this a bullish pattern of consolidation right there? What I'm following is this low. If you connect these lows right here, in fact, let me zoom in on this so we can do this educationally a little bit more important, right? So basically, if we look at this chart, right, and we look at what I'm looking at, as of now, I would consider this to be a bullish pattern. But if we start to see, right, so if we start to see these lows right across here, if price starts to trade, if we get candles down here, then that fails the pattern. So as of now, the probabilities of this setup is that the 10-year yield, right, the 10-year yield should head higher as of now, unless we start trading below here, in which case that flips it and it now becomes a failed bullish pattern. And failed patterns actually have big moves in the opposite direction, mainly because there's a lot of people that are thinking the same way I am. That's a bullish pattern, and then they're positioning themselves long. So if you start to see a failure, they all have to flip and unload those positions, which then causes a bigger move to the downside. All right, so just a few little tidbits there.
For the first time in 5 years, Google has opened its extensive advertising network to specific crypto-related offerings, notably the newly introduced spot Bitcoin ETFs. This marks a notable change from the company's stance in March 2018, when it, alongside Facebook, banned cryptocurrency-related advertisements. Within 13 days of trading, these new spot ETFs have collectively racked up over 150,000 Bitcoins in assets, showcasing their rapid growth and increasing market influence. What are your thoughts on whether Bitcoin is back on its bullish trajectory? Share your thoughts in the comment section. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.